Hey, 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 hey. Welcome back to the Home Loans Radio Show. We're here doing what we do every single weekend morning, talking about what, MJ?
Oh, mortgages.
Yes, wake up over there.
Oh,
We're
yeah.
talking about, your questions. I'm a mortgage expert. I'm here with my crew, Fritz and MJ.
That's right. Guten Morgen, wie geht's?
Wie geht's? What does that mean? What's happening?
What's up?
Going on? Yeah, nice. Welcome back to the show, folks. We're doing what we do. You can text in your questions here to 77031, and I will answer them live on air. You can also go to thatmortgageguy.com. Oh, no, thatmortgageguy.com or homeloansradio.com, and you can do a lot of other things there. If you got a question during the week, you can go there and text it to me. Put it in the box that says Ask Don, and that comes right to my email. You can also do a direct chat there during the week. You can hit the Apply Now button. We'll send you a quote or get you pre-approved for your purchase or get you a quote for your refinance. You can also listen to every single one of these radio shows that we've ever done. So if you're sitting there thinking, man, I wish I had more of this. Oh, how I wish I had more of this. Well, you're in luck.
This is what's been missing in my life.
Yeah.
Thatmortgageguydon.com. You can also, that mortgage guy Don, follow me on Instagram. There's a lot of cool stuff there on my link tree as well. Welcome back to the show. We got some questions there, MJ.
Yes, we do. Someone hitting us back saying, awesome, thank you for answering the question. And here's someone who's saying, getting back to that extra payment each year, should you include the escrow payment or just pay the amount that goes towards your mortgage loan with your extra payment?
Oh, you would just do the principal payment. Yeah.
Okay.
So you have to tell your lender that when you send it in, you have to specifically earmark it. If you do it online, there's a box that it says apply to principal only. And that has to be, of course, in addition to your normal payment. But so, yeah, when you're paying that extra, pay it 100% to principal only.
Yeah, like write a separate check, because if you don't make it really clear, they'll just throw it in as a mortgage payment.
If you're going old school and mailing them a check,
oh, I see.
Then you do a separate you want to do a separate check and earmark it for principal only,
or online. I'm sure there's a way to do that.
Yep.
Question: how many people can you put on a deed?
I don't know that there's a limit. To be honest, I saw an entire family on one, and it was about 12 people. It was like a family home that had been in a family for a long time. I don't know that there's a legal limit, to be frank. So
all right.
How many you got?
Here's someone who says, I'm basically unemployed, but my home is paid for. Is there a way I can get some cash out of it to start a business?
Really, the only way to get a loan on the equity of your home, if you don't have income,
how old are they?
Yeah, the question is, if you don't have any income, how are you going to repay the loan? Sometimes people have, when they say they say I'm basically unemployed. So maybe they've got a source of income that's not taxable or not kind of your cookie cutter type income. So it depends if you've got a way to repay it. There may be a loan you can do called a hard equity loan, which is a private loan that's based solely on the equity of your property.
That
usually
sounds
lenders
really, really tough, like hard equity.
Hard equity.
That equity grew up on the streets.
Tip your bartenders. To the stage comes hard equity.
Oh, all
okay,
right.
that got blue. That got blue real fast.
Just dancing.
Huh. Right there on the tip of your tongue.
Sorry. Hard equity.
Well, I don't know why they call it hard equity. I mean, I guess it's because it's solely based on the equity of the property. They don't care about your credit. They don't care about your job. You don't have to, prove debt ratios or any of that kind of stuff. Basically, they're going to give you half of what your house is worth. And the interest rates are usually high. There's usually some fees. There's some other rules where it has to be for a business purpose, like in this case, if you're starting a business, you may be able to work it out that way. That's really the only thing that I can think of. If you have some other form of income, like say you're self-employed and you can't really document your income very well because of your taxes, maybe you write off everything you make. There are loans out there that you can do based on what your deposits into your bank account are.
What if they're old enough for a reverse mortgage?
If you're old enough for a reverse, that's pretty easy. If you're over 62, then you can do a reverse mortgage without any income because you don't have to pay mortgage payments. But if you're over 62, you're probably eligible for Social Security or some other sort of retirement income. But it's possible. But tough to do, especially any sort of normal or conventional loan or FHA loan. You're going to have income. Now, you can add a cosigner on there. So if you've got a family member that's got a job and wants to go on there with you, then you can put them on there. Even if you have no income, you can both be on the loan.
Good morning, Mr. Mortgage Guy.
Hey,
Very
good morning.
morning.
Good morning, Miss. A very long time listener of 104.1. I am tired of renting. I have a low credit score, but I'm willing to take anything, even a foreclosure. What is your best advice?
Well, you're probably going to need to work on the credit score. I mean, they've back in March of 2020 when COVID started, all the
Mhm.
credit scores requirements jumped way up. They went up to like 660, 680. Some banks even went up to 700. Just this past week, we are back to where we can do FHA loans down to a 600 score. So the goal, I think, would be to try and get your score up to a 600. If you know what you need to do to fix it, then you can work on that. If you don't know, we can help you with that. You can do, apply to get pre-approved, and then we'll look at your credit. And we have a system, a tool that we use where I can tell you, hey, pay this card down, pay off this collection, over time, and your score will come up to 600 within 3 months or within 6 months. So we can kind of make a plan for that. But other than that, you're really going to have a hard time. I'm working on a mortgage right now, MJ, for a person who had been renting for 34 years.
Wow, 34 years.
Yeah, and they're retired. They're older. They just never bought a house, and now they're buying their first house.
Wow.
Now's the time to do it.
After renting for
Right.
34 years. And his rationale is that if I'd have bought this house 34 years ago, I would have already paid for it. And in the same place, he lived in that same place for a long time. So
Wow.
but that's some people are tired of renting, and with the rates as low as they are, you can get a really good deal. In a lot of cases, you can pay less for buying a house than you could for what you're paying in rent.
What made them decide to forego being a renter?
I think they just wanted to, be a homeowner. And they also told me they had been listening to this show for a couple of years, and
Oh, wow.
they had thought, you know what, I'm going to give that a try. So thanks for listening, and we can help you. If you're tired of renting, go to homeloansradio.com. We'll hit the apply now button. We'll do a pre-approval for you. And if you're ready to go, we'll tell you you're ready. If you're not, we'll tell you exactly what steps you need to do to get ready to go.
Sometimes this happens, but it did just happen where we got two separate people asking us basically the same question.
Okay.
Which is kind of cool, and it's a kind of an obscure one. Here's one. Hi, Don. My question is, my credit is not the greatest. I was told doing a rent to own might be my way to go instead of trying to purchase a home myself. What do you think about that? The other question is it safe to get a rent to own house? Are there any pitfalls to watch for?
It can be safe, but it can also be kind of risky. A rent to own, what they mean is basically you do a contract with somebody that owns a home. Usually, you're not dealing with realtors, or you're just talking to the seller of the home. It's an agreement between the two of you. And a lot of times they'll ask you to put down a big down payment, $5,000, $10,000, something like that. Or they'll take that plus part of every month's mortgage and put it towards, in the future, they'll apply that towards your purchase. It can be good because it can help you get into a home and work on your credit. It can be bad in some cases, though, too, because a lot of times they'll have a balloon on there, meaning they'll have a time limit. They'll say, like, okay, if you can't purchase the house from me with a mortgage, within 3 years or 5 years, then you lose whatever money you've put into it. So that can be a problem where, if you're working on your credit score and you just aren't able to get it up high enough, or you lose your job or something keeps you from qualifying, then you could lose all that deposit that you put in there if you're into that type of rent to own. You don't have to agree to that. So if I was negotiating for a rent to own, I would make sure there were no balloon payments in it. But most sellers are going to want something in there. They don't want to, be 30, 40 years later, and you still are doing.
I mean, how long does a rent to own usually last?
Normally, most of the ones I see are 3 years or 5 years, where you've got a certain amount of time to qualify for the house. The other problem, though, with a rent to own is normally the majority of the ones that I see that I think are good are with family members, with somebody with a trusted family friend or something like that. If it's a complete stranger, you can get into some really sticky areas. I mean, what if they pass away, and you're still doing a rent to own? Maybe their heirs who inherit their property don't want to, keep doing that way, or maybe they have a mortgage payment and they stop making their mortgage payment and the house gets foreclosed on. There's things that can happen that can be pretty risky. So my general advice is that I would only consider doing one with somebody I know well or trust. But I've seen them work successfully for other folks. They definitely do. It's just, there's a certain level of trust that has to be there, and things can go wrong.
Are they out there right now in this market?
I haven't seen too many. I've got a couple that I have, on my desk right now that I'm working to help people with purchases on. So I definitely am seeing some, but not nearly as many as I used to. And the ones that I'm seeing are people that have been, renting for quite a while. Yeah, to answer the question, not really seeing them very much right now. Pretty infrequent.
All right, because it's kind of a thing that happens when it's a buyer's market.
Yeah, when people are having trouble selling their house, that's the type of market where you usually see those. And so they will go to other people that maybe aren't quite qualified, and they'll sell it to them on a rent to own.
Here's a question. I have a first mortgage of $520,000 at 4.5 and a HELOC of $40K at 4%. Can I combine those and get a first mortgage with a better rate?
Yeah, you should be able to. The only problem I can see there is the dollar amount. So you 520 and 40 are the two loan amounts.
Yes.
Okay? So that's 560,000. So the maximum you can borrow and it not be a jumbo loan. So the maximum conventional loan is $558,250.
That's close.
So those two mortgages by themselves are going to add up to more than what you could do as a conventional loan. In order to get really the best rates, like what we were talking about earlier, a 30-year loan, in the 2s, 2.875 or 3% in that range, you're going to have that loan amount, but below $558,250. And then you're also going to have closing costs of usually about 2% on a loan. So you're probably talking, $8,000 to $10,000 in closing costs on a loan that size. Big loan over $500,000.
Yeah.
You're going to have a lot of closing costs.
Yeah.
Just the doc stamps are going to be a few $1,000s because doc stamps are a percentage of the loan. They're 0.70 or 70 cents for every $100. So,
what if we don't know what their house is worth? They owe $520 because what if they have enough equity to pay off the HELOC?
Well, you could, that's another way to do it. But no, because your loan's going to have to be at least $560 to pay off the HELOC.
Right.
So really, the only way to do that is either wait and pay those loans down a little more, or bring money to the closing table. So if you're a couple $1,000s short on the loan amount, and you can bring your $8,000 or $10,000,
they have a pretty fancy house. They might have some money in the basement.
Yeah, I'm guessing that the house is probably, with those mortgages on it, they're probably worth. It's got to be worth $600,000, $800,000.
That's a fancy house.
Did you say money in the basement, MJ? Like
yeah,
they just keep all their gold ducats and gold bars and doubloons.
I just picture it like McScrooge. Yeah, like you get down there and there's a big pile of money.
Is that where you keep your money, in the basement?
Yeah. Coffee can.
Buried in the yard.
Folgers and Sanka. Thank you very much.
One of the reasons I have a metal detector.
That's very nice.
Yeah, to be able to go and find MJ's money in the yard when she's out of town.
Oh, good call. I don't know. It sounds like a pretty fancy house. So,
but yeah, you could do it if you've got. You'd have to bring some money to the table. Is the bottom line. You could do a jumbo loan and do it, but your interest rate won't be as good. So I'd either wait, or I'd consider bringing $10,000 or $12,000 to the closing table and get that loan amount under the limit. Great question. We're going to take a quick break. Come back for the final segment right after this.
Do you have a question for that mortgage guy, Don? Text us at 77031. Now back to Home Loans Radio on Real Radio.
Oh, and just like that, we are in our last segment. Where do the minutes go? I'm Fred, joined as always by MJ and That Mortgage Guy Don. You can visit homeloansradio.com and also thatmortgageguy.com. Oh, That Mortgage Don. ThatMortgageGuyDon.com.
All of that.
I couldn't remember.
That Mortgage Guy Don.
Yep.
Yeah, that mortgageguyDon.com. Also, that's follow me on Instagram, That Mortgage Guy Don.
Yes.
Welcome back to the show. You're listening to Home Loans Radio with me, with That Mortgage Guy Don, MJ, Fritz. As the man said, we're here. We're in the last segment. We got time for another question, MJ.
Sure. All right. I'm interested in a refinance, but I have questions on how it all works, what my best options are. I currently have a private mortgage, 25 years at 5%, purchased in February 2019 for $275,000. I'd like to lower my payments, but not sure if a cash out refi makes more sense. What type of cost can I expect from a refi?
Well, yeah, you can do. So a private mortgage, that's when, basically a lot of times that's the seller of the house will write a mortgage, and then you pay your payments to the seller of the house. And so what was the rest of the question?
The rest of the question was...
I'm sorry. It was private mortgage. What were the amount?
They had 25 years at 5%.
Okay.
They bought it in 2019 for $275,000.
So a private mortgage is where you're paying the seller, whoever's selling the house, usually the owner of the house. They will write a mortgage. It actually gets recorded. It's different than like the contract for deed